welcome to a quick pre-market video, which is called FOMO Bounce. Is it here? We had got quite some news late Friday before the government shutdown deadline, and it's going to be having some consequences which we had seen unfolding pre-market. My goal with this video is to get it under 5 minutes so as to prepare you for today's regular session. You have full details within the long weekend video. Thank you so much for the warm reception and reactions. Thank you for liking these videos, subscribing to the channel and commenting. So let's dive straight away. As you know my site already and the full scope of everything I do for you, whether for free or first premium, of course, clients first, clients always first. So let's dive into the charts. In the long weekend video, you see me diving freestyle, my typical freestyle, into this presentation slide, covering the macro environment we are in, inflation path, consequences, what it does to bond yields, and what I see unfolding in the dollar. And consequences, important concepts for equities such as the equity risk premium and that we are no longer in a TINA environment and comparison to 2019. So now finally those charts. Today I'm uncharacteristically starting with the Forex arena with a view into the Euro chart. You can see that the dollar following the deal is still strengthening. I have been calling for it to bypass with ease 108 to the upside, and we are going pretty much there. And it's not a function of Eurozone economic underperformance and sluggishness and regulatory environment and everything else that you heard me covered live within these videos or more likely on the Twitter feed. Yeah, so much chatter about rising yields on the Japanese government bonds, about inflation situation, upcoming intervention, but you see that this is still on the back burner because US dollar versus the yen keeps strengthening. So don't jump the gun on this one. There is no shock on par with the July dive. There is no better word to describe that than perhaps panic. The third one that I'm bringing is one of the many that I use for assessment of risk-taking and sensitivity for safe haven bid, and this is Swiss franc versus US dollar. And you see US dollar as the risk-on currency still strengthening against the Swiss franc. Other charts that can be used for similar purpose, you could be looking at Singaporean dollar, how the peg to Hong Kong dollar is doing, and on the other side of the universe, you can be looking at Australian or Canadian dollars, how these are looking, because these are kind of commodity proxies. So you had seen no stress sign within the currencies. The dollar is surging and ultimately it's going to be taking its toll. That's my warning sign when it comes to the Forex arena. This chart is heavily skewed towards short duration bonds. So think 2 years or maybe shorter. So this is my bond aggregate, and you see that what was supposed to be a Treasury's positive deal, the government shut down, being averted is not having the desired consequences, because the trend to see bond yields rising is still there, well entrenched in place. Remember what I told you about Daly being comfortable with 1 to 2 cuts in 2025, which is a serious disappointment to all the liquidity seekers. So we are seeing more pressure on the equity risk premium side of things when bonds risk-free rate of return is presenting extra hurdles to the stretched valuations within S&P 500. So this is one more chart to remember, and it helps explain why US dollar is surging, keeps surging, and will be keeping surging. Sure, I could have compressed the S&P 500 chart to make those candles shorter, but this is kind of reminding me, it's my personal quirk, it's reminding me of heightened rising volatility as of the Wednesday's curveball and Powell fumble. As you can see, this is an hourly chart, and as you can see, the pre-market upswing in S&P 500 pretty much fizzled out when European bourses had opened up for their regular sessions. And we are seeing some kind of a basing attempt that corresponds to roughly the 6,000 area in ES futures March contract. So this is kind of basing sideways, but let's dive into the question whether I see any kind of a bullish tendency or still bearish tendency, or what to expect for this light volume week, the Christmas week. You remember me introducing towards the latter part of the weekend video the two scenarios and the effect of the deal and of those repo operations that are going to be striking January 30th. So this light volume session of today and the Christmas time and between and before the New Year's Eve will kind of reveal positioning for such an liquidity influx, because the Fed is ultimately the buyer of last resort. So this is the S&P 500 view of the situation, followed by Nasdaq view. I see some sign, some budding sign. It's not very pronounced because on Wednesday Nasdaq was hammered just as much, and the ratio of QQQ to SPY went down, reversing the trend of previous days to the upside that I had called for you. But it is starting to turn up, and this is one of the ratios that I will be watching keenly throughout this week for signs of risk on either returning or not returning. So this is the other chart, hourly chart of Nasdaq, worth watching. Finally, no surprise here, Russell 2000 is beaten down badly, and given the bond market path and the dollar path, I don't expect it to change this week in the least, because the Fed had spoken and made its mind quite clear. So this is how the index comparison between the three leading ones is looking going into today, with Russell 2000 being the most distinct underperformer that is out there, And it of course has consequences for interest rate sensitive sectors. You know me criticizing the bullish prospects of real estate, home builders. You saw what kind of a beating Leonard took, and the forward guidance, which is frankly pitiful. And you know already how I spoke on the weekend about equity markets punishing forward guidance adjusted to the downside, and I quoted Micron as the perfect example thereof. So this was the introduction into today's pre-market session. Very quickly, you know my join page that is helping you choose the right product given who you are as a trader and what you trade, with my one-on-one direct support behind the scenes. Always, thanks again for liking this video, subscribing to the channel, commenting, asking, talking on Twitter, making chart requests, and whatever helps you being a better trader, and giving suggestions what you want me to be covering in the upcoming videos, in the upcoming articles. Make sure that you are subscribed for free on my site and are connecting the insights that I cover with written word and with the spoken word. Forget not about the intraday channels, and forget not that the Trading Signals has its own dedicated gold and silver, gold and oil chiefly, commenting silver and copper on requests, Telegram channel as well. So, side term supply, you know full well my trading story, how I broke free, and all the legal saga, and what I think about the society we live in and financial industry. Thank you very much. My first priority is you, and serving you the best as I can, and providing first-in-class services, because I want you to genuinely succeed. See my pinned tweet for that. For obligatory disclaimer, and let's talk later on. Let's talk markets and to your success.